The S&P 500 is soaring, but is the rally running on fumes or firing on all cylinders? Welcome to Daily Market Waves by Investing Angles, where every candle speaks, every Elliott wave whispers, and we chart the turn before the herd even blinks. Tonight's focus: volatility. Weekly candles are quietly flashing warning signs. The dollar. No rush rally here, just methodical base building. Bonds. Large frame candles are calling the shots, and TLT is listening. Oil. Textbook bearish continuation. Gold and silver. Critical weekly closures ahead. Uranium. Already igniting and prepping for one more pullback. The Nasdaq. Our updated Elliott Wave path. And our special features today: Microsoft and Goldman Sachs, two titans, but are the foundations still intact? And a big thank you to our 18,000 plus subscribers. Your trust drives this channel forward. And if you are new here, this is your signal. Subscribe, like, share, and drop your favorite ticker in the comments. And we begin, as usual, with Volatility Index. The candle closure today was bearish. However, in the bigger context, for example, for volatility futures, I already discussed this a while ago, saying that we might see 3 waves down, 3 by 3 candles, and after that we might see a move upward. At this point, the reversal is not complete yet. So in order to complete it, volatility futures needed to close below this red line. They had a chance today, but they failed. Let's see if they accomplish this tomorrow. And if you look at the weekly frame, this is the most concerning one. I'd like to repeat that 3 weeks ago I said that the candles at the top were not extremely strong, and we would need to see a very assuring confirmation. So far, week number 3, and we don't have a confirmation, and this becomes a very concerning fact, and we might see a reversal. Potentially this could be a rising 3 methods. So this last 3 is just a setup for another candle upward. Let's see how it closes tomorrow. Technically, for confirming a top, the volatility needs to drop below this line, which is 2068. Let me put a mark here. So 2068. So if volatility closes below this line, then we will sure have a reversal on the weekly frame. However, anything above that, it would be bullish, if not strongly bullish. And the final chart for volatility, this is our Elliott wave that we are tracking here. Although I'd like to say that Elliott waves are not exactly the best tool for tracking volatility. Sometimes they deliver awesome results. So far, we are seeing that the wave down has been corrective, and there is a chance that we are observing wave C being developed. So my target was here around 2485. However, if it moves a little lower, it would be quite normal. Once this potential flag is complete, then we would be looking for targets here. So far, the targets might need to be adjusted a little bit, but once we know the exact bottom, we will talk about the exact targets. So that's all about volatility, and now let's have a look at the dollar index. What is it telling us? So after a very strong bullish move on the daily frame, we had a continuation candle. Today, move was bearish. However, it wasn't extremely bearish, and it wasn't able to reverse anything. We will see how it closes tomorrow. Tomorrow will be a very critical day. And I'd like to say that if we look at the weekly frame, the weekly is most likely forming an interesting combo, which is called the ladder bottom. We have 3 candles, each one is smaller than the another, and they're stacked within each other with the high shadows in this case. Let's see if it closes like this. A closure with a red candle with a small doji here would be very bearish. If it makes it a green one, I would say it would be a continuation candle. We might see a lower low for $. And this is our Elliott Wave chart. So far it's been on track, and this we discussed it since the end of March. That's the perspective target. So far $, is sitting within the target area. Whether it goes a little lower, it's already touched the ideal target area. Let's see if it tries to do it again. So far it is setting for a reversal, and this would be an ideal flag if it makes it a little lower. And just to update the date today, April 24. That's all I wanted to say about the $, and obviously we will discuss it in a very detailed update on the weekly report. So now let's move on to the bond market. Let's listen to what candles for bonds and yields and TLT are telling us. So the move today was bearish. However, it wasn't able to fully reverse anything. We need a confirmation, and as we didn't have any momentum closure today, we would have to wait until tomorrow to see what would be the result. And meanwhile, we can have a look at the bigger candles and try to project what US 10-year yield candles are telling us. So first of all, this is a 3-day frame, and I'd like to say there is a possibility that we can see that the 10-year yield formed a strong bottom here, and it might be forming just a flag here, something like this, for example. So this is a bullish flag, and once it's complete, it might take another week or two, but 3 weeks is usually enough for the next move upward. So once we can see this complete, I would be looking for another leg upward. The same message we are seeing on the weekly frame. After very strong bullish engulfing, we were having a neutral candle, and this candle is not going to make a bearish reversal, if it closes like this. If it makes a much stronger move downward, we will reassess it, but so far this closure looks bearish. Maybe we'll see another candle, another weekly candle, another doji or some sort before the next move launches upward. Speaking about TLT, the candle closure today was somewhat neutral, and we will need to see the confirmation of it tomorrow, whether it's going to be up or down. So far the odds here are bearish, and the trend is bearish. The same applies for the weekly frame. We would like to have, most likely we're gonna have another continuation candle or consolidation candle. Let's see how it closes. So far this candle is not shaping up strongly bullish, and all eyes will be on the monthly closure, which is so far tracking bearish. And I'm not even talking about larger frames. So let's see how the month closes on April 30th. And speaking about the TLT Elliott Wave chart, nothing changes here. The same chart that we left yesterday. We might see maybe another higher high here, but in general I am looking at this wave as a consolidation before moving downward. So far this wave has been corrective. Let's see what candles and what technicals will tell us in the next couple of days. Tomorrow's closure would be very important. So that's all about bond market, and now I'd like to move to commodities, and we will start with oil today. So on the daily frame, there was not even an attempt to form a bottom here. So most likely this candle is a continuation, bearish continuation candle. And if we look at the 2-day frame, which also closed today, it's a stronger bearish engulfing here. The chances for moving lower are fairly significant, remain on the table. And this is the monthly closure for WTI. So far, it is very bearish candle, and in order to make it bullish, oil would need to rally about 15 some percent in the next 4 days, which is technically next to impossible. Now let's have a look at the Elliott Wave. This is what we charted and shared with our subscribers on April 18th. So far, it looks like oil completed an ending diagonal and is ready to move down significantly. So this would be the most immediate target, 58.4, and these would be the targets if we consider this as an ABC formation. Well, wave 3, if it is a wave 3, if oil forms a very strong impulsive wave, we would be looking for much lower prices at this point. And the final chart here, I would like to discuss ExxonMobil, Chevron, and ConocoPhillips from the perspective of their weekly closures tomorrow. What we are seeing here, a very strong bearish candle, and in together with the few previous one, it's a strong tower top. These three candles, three green candles, most likely they are just three failures, and I wouldn't be surprised if the red one plus three green ones will form a strong falling three methods. So slight and somewhat similar situation for ConocoPhillips. If we talk about Chevron, it is slightly different. We might see a bullish engulfing, and there is a chance for a little rally here. Let's see what and how it closes tomorrow. And later on, we will also discuss the energy sector altogether. Let's see what kind of surprise candles prepared for the sector together. Now let's move on to the precious metals, and we will start with gold. So yesterday, gold technically confirmed a top on the daily frame. However, it wasn't able to immediately form a 2-day continuation candle, and most likely this is just a harami, bearish harami. Now we need to wait and see whether it's gonna be confirmed downward or upward. So far, the chances for downward move are slightly better. And one more thing I'd like to mention, this is the weekly closure tomorrow. If the candle closes like this, the candles, this would be an advanced block. 3 candles. So they are the opposite of a ladder bottom for bearish, for bullish reversal. This would be very good chance for a bearish reversal, especially if this candle doesn't close above the previous week high. So something to keep an eye on this one. If we look at the Elliott Waves, this is a slightly updated chart. I think that gold indeed formed an impulse down. This is the wave how I would break it. 1, 2, 3, 4, 5, and this would be either wave A of a bigger correction or wave 1 of a much bigger impulse. I think that the wave A here was corrective, and there is a good chance that gold would be forming a flag here. However, the red path is primary at this moment. However, if it decides to make it an alternative B, like a stronger and longer wave B here before making another wave C here, this is also possible at this moment. Let's see how it closes tomorrow. So far, the wave upward has been corrective. And the final discussion here is on the GOD. So far, the candle has been bullish, and it looks like it's already closed one gap out of 5. Let's see what would be the next move. If we look at the 2-day frame, after a strong bearish engulfing yesterday, today it tried to negate it. However, the closure is tomorrow, and the decision will be made tomorrow. If we look at the weekly frame, so far it is looking bearish. Let's see at what level it exactly closes. If it whether it forms an on neck pattern, which could be a bullish continuation, or whether it makes a dark cloud cover or even stronger bearish engulfing. So that's all for gold. Now let's move on to the silver part, and the candle today was technically neutral after a very strong move upward, and I would say it has better chances to move upward. However, if we look at the weekly closure, and this is a very similar formation that we already seen on multiple charts previously, a very strong move down, potentially tower top, 3 attempts to negate it, and if tomorrow's candle fails to close above the high of this red candle, this formation becomes automatically bearish with the chances to move lower, and this was the harbinger of this formation. Just a few days ago we had a 15-day closure with a strong inside down candle, if you remember our discussion. So this next candle is closing in 18 days, and we can safely ignore it for now. The most important are the red one and the green one before. If we look at the silver chart, so there is a possibility that silver is forming an impulse. The only thing I don't like about impulses that are ideal. So if we try to put this impulse into the channel, it forms an ideal channel, and this is not the best sign in general. But let's see how it closes and what kind of wave it makes, because it could be wave A of a corrective action downward, or if it makes a new higher high here above this red line, this would definitely be an impulse with the potential to move higher. So this would be wave 1. I would be looking for a correction towards wave 2 and another wave upwards. Let's see how it closes tomorrow. It will be extremely important, especially from the candle's perspective. And if we look at the SLV, so absolutely the same situation that silver is showing us. So technically this could be a neutral candle for the daily. Weekly desperately needs to close above the red candle high, and it is 3102. Let me put the number here, 3102. So a closure above this line will most likely reverse the bearish odds and open the path for higher highs. The same situation happened on the 15-day frame. Well, that's silver. Extremely important closure tomorrow, and depending on that, we will be looking for the next moves. Uranium. The next chapter of our discussion is uranium. So far, yesterday's candle was indeed bullish, and today we have a strong confirmation of this bullish harami. The chances for moving higher are significant. especially if we see a momentum changing on the 2-day frame, which flipped bullish today, and this scary candle, weekly one at the beginning of the week, now it transformed into a more neutral or incomplete dark cloud cover. Let's see how it closes tomorrow. If it moves a little higher, well, it would be even better so far. And for energy fuels, this is the chart that we discussed with our subscribers on April 18th, saying that after the first impulse upward and an ending diagonal for this, we would be looking for a sharp move down, potentially wave 2. This could be all we had for wave 2, but in general I would be looking for another wave, maybe to extend it, to make it look more natural. However, if we see a very strong move higher here, this wouldn't be surprising either. So far, this setup is bullish, and the question is how it closes the week and whether it makes another corrective action before shaping another impulse. That's all about commodities for today, and now we move to the stock market, and we start with S&P 500 and other indices. So first of all, I'd like to say that today's closure for S&P 500 and Nasdaq was indeed bullish, and but there is some disconnect between Dow Jones and Russell and S&P and Nasdaq. Dow Jones and Russell, they also formed bullish candles, but were not that assertive comparing to the first two. And if we look here at the futures, which already closed, so what we are seeing here is that the futures for S&P 500 and Nasdaq are indeed bullish. However, the futures for Dow Jones and Russell are bearish. So it was an inside candles here, inside the big shadows, upper shadows of the previous candles, and I would be looking at this as a potential bearish reversal candles. Let's see what kind of candle is formed tomorrow. So this would be the first alert. We might see the second one tomorrow. If we look at the 2-day frame here for Nasdaq, if you remember our discussion, it was a very strong bullish closure yesterday, and so far, as expected, the indices moved upward. Now the question is how they close tomorrow, whether they make a strong move higher or they retrace and do something more bearish. And from the weekly perspective, I put the weekly chart here for S&P 500 on SPY. So in order to form a bottom on the weekly frame, SPY needs to rally about 3.78%. Well, that's a tall order, and after today's 2%, another almost 4% tomorrow. Let's see if it's doable. And somewhat similar situation for Nasdaq. If we look at the 8-day, if we look at the weekly frame, another strong move, approximately 2.6, 2.7% is needed in order to close this bottom. And just if we look at the bigger frames, for example, for Dow Jones, this is the monthly. So far, it's going to be very difficult to form a bullish candle here. At the best, I would say we can have a neutral one, and in order to form a neutral candle, Dow Jones needs to rally approximately 4% in the remaining 4 days. For a bullish candle, it would need about 7%. Well, I don't know whether it's reasonable expectations, perhaps not. So this is the candle perspective. now let's move on to technicals. They are quite telling by themselves. So this is the freshly made bearish crosses, MACD bearish crosses on the monthly frame. I'd like to remind that MACD, Nasdaq, and Russell, they made MACD in March, and Dow Jones and S&P 500 joined in April, the first day of April. I ran some statistics, and in order to revert these crosses, Nasdaq needs to rally about 7-8% in the remaining 4 days, S&P 500 5.5 to 6.5, Dow Jones 6 to 7, and Russell, drumroll, 9 to 10. Well, that's quite a tall order, and with 4 days remaining, we are actually expecting the next 4 candles. Next 4 days would be about 2 days each, 2% each, which is quite possible. Well, let's move on to the next session, and this is Elliott Waves. So this is the chart that we discussed way back in April 22nd when we finalized it, and so far it is moving nicely towards the target. So first of all, I'd like to mention that this blue target has been surpassed, and now we can safely remove the blue path here. So, and the red and purple remain on the table. So what I'm looking for potentially, the very first wave here was clearly corrective. I don't even know how to break it into potential leading diagonal. Well, so this is clearly a corrective wave. A, B, wave C. So we might see a zigzag, a very clean zigzag for wave either B of a bigger correction or wave A of a more complex wave B. Let's see how it develops. So far, this would be the ideal targets. So the intersection of these two rectangles. This is something that I would be looking for. Let me put the targets here. So this is approximate ideal targets based on several Fibonacci and other measurements. Well, so that's the short-term perspective for S&P 500. And now let's have a look. Let's zoom in. So technically this is the same chart, just the last wave on a different scale. So this is the 30-minute scale. So these are the most ideal targets that we'll be looking for here if we just measure this particular zigzag formation. Technically, it needs to run towards 5600. So if it fails to reach this target, it would be considered a truncated zigzag, and the consequences would be far more severe. So that's the perspective from Elliott Waves. Now let's have a look at the candles of the sectors, major sectors. So I would say that all sectors today closed, like financial, technology, healthcare, consumers, discretionary, industrial, they closed with bullish candles, and the chances for a move higher tomorrow are significant. If you remember our discussion about staples, it could be the first signal that the ending diagonal is done. If you didn't have a chance to review this, I would encourage you to check our yesterday's video where we're discussing XLP consumer staples. Utility is somewhat neutral, and energy is bullish neutral. However, the most interesting thing are revealed when we start looking at the weekly frame. So this is the same sectors, from the weekly perspective. So what I'm seeing here is this a very similar situation that we discussed for the index itself. All candles, all sectors need a significant rally tomorrow. For example, financial needs about approximately 4.5% tomorrow in order to form a bottom here, a reversal. Energy, for example, is strongly bearish here, and I think this is a clean setup for falling three methods. Remember, we just discussed ExxonMobil, which is the biggest contributor, about 25% to the energy sector fund, and I think they're very well aligned with these candle formation. Utilities also need about 2.3% in order to reverse the bearish odds here, and the somewhat similar things. So I think that the most difficult step for reversal would be needed for the healthcare fund. So I would say that the bullish reversal here is impossible, and so on and so forth. And if we look at the bigger frames, for example, on the monthly, so these are the perspective for the monthly closure. And as you can see, the candles are so far bearish. In order to make them bullish, a lot of effort is required. Let's see how the next 4 days will be worked with the indices and major sectors. And now let's have a look at the biggest large caps. These are the daily frames. For Microsoft, for Amazon, they are technically bullish. However, if we start looking for the weekly frame, a very similar situation. A lot of effort would be required in order to close this week with bullish candle. So far, they are closing with a bullish attempt. Well, but tomorrow we need to see a closure. Well, that's the perspective for the large caps, and now let's have a look at Nasdaq. So Nasdaq was pretty much similar to what we had for S&P 500, and yesterday I proposed this potential path for another one in addition to the purple one that we discussed way back in April, and so far it has been followed. Now we have a higher high here, so it could be either the end of wave A here somewhere, I'd like to adjust it, or it could be the entire wave B, which is also a possibility. However, I'm leaning toward the purple scenario here. Let's see how it closes tomorrow. It will be a very important one. And if you look at the short-term frame, so this is the perspective that we outlined also back in April 10th. So this is potentially a bearish flag being formed, and I would like to say that I would love to see it running towards 20K. In this case, it would be a more natural bearish flag. Otherwise, it could be considered, if it reverses right here, right now, it would be considered as a truncated zigzag, and this would be a concern because the wave down could be very fierce. That's all for the indices for today, and the next is our two features of the day, and we start with Microsoft. Microsoft, as I already discussed in the large cap chapter, formed a bullish candle, and technically it has a very good chance to break the over 50 days moving average and continue the rally. However, the question is about the bigger frames and bigger candles. so far the weekly is framing neutral, potentially bearish, depending on the closure. And Microsoft needs quite a rally tomorrow in order to make it. So about 2% it needs to add in order to reverse this odds. But if we look at the bigger frame that closed just last week, the 15-day frame, it formed a bearish continuation candle, and the monthly, the previous month was strongly bearish. So far the candle is forming a piercing line, but we need to see how the last 4 days, how in last 4 days Microsoft trades. Speaking about the long-term chart, this is the chart that we shared in October when we said that Microsoft is done with its top, and so far Microsoft has been falling down and it's almost hit our target 341 that we outlined back then. I think that this is not done yet, and we would be looking for a lower moves. Not only to the red one, I think that the blue one can also have a good chance to happen. Let's see. The next one is, this is the short term. Again, this is the chart that we shared on December 18th, saying that, so this was the chart, saying that Microsoft starts to form a move, a big wave down. Potentially it formed 1, 2, wave 3. This would be 4, and another wave 5 for a bigger wave 3. This is the potential, or it could be also wave A of a bigger correction. Let's see how it moves. But this might be also the entire correction, and at this point we are looking for an extended move. And the final discussion here is, this is Microsoft 1 month chart, and this is one of our earlier call in October, saying that Microsoft was about to form a MACD bearish cross, and after that we are expecting it to move lower towards 285 or even lower, because there were some technical support that would allow for a bigger correction. So far Microsoft is slowly moving down. Potentially, let's see if it is able to form a bottom here. Well, that's all about Microsoft. So far the candles and technicals are not ready for a big reversal. And now let's have a look at the final feature of the day, is Goldman Sachs. Let's see if the financial giant is indeed healthy. So the biggest, one of the concerns today is that the daily closure, I would expect it to be aligned with the other candles and overlap this big red candle, but unfortunately it wasn't able to negate this candle completely. So far the odds are somewhat neutral, and depending on the closure tomorrow, we might see either bearish or bullish closure. The weekly frame is also similar to the indices, and Goldman needs about 4%, make 4% tomorrow in order to flip the bearish odds on the weekly into the bullish side. However, this is all good, but if we start looking at the bigger frames, for example 15-day frame, which just closed a couple of days ago, so far this formation is clearly bearish, and I'm not seeing how it can transform into a bullish easily. And to add to the concern, a freshly made 15 days MACD bearish cross. I think it was of a record magnitude. Yes, indeed. So this is the beginning of a move down. How far would it go? We don't know yet, but we can approximately measure, let's say, based on the previous decline, which happened in 2022. Then Goldman Sachs lost about 35%. So if we consider a somewhat similar decline, so it would be, well, it might be already done. But however, this chart is just the beginning. The cross is just started, and it has a higher magnitude. I would be looking for a lower move down. So now let's have a look at the chart. So this is the perspective that we outlined in March. So far, Goldman hit the middle of the red target, and obviously we will be looking for potential to move higher. However, some technicals tell that this is just the start, and we would see a much longer and stronger wave downward. If we, yeah, this is another view on the MACD cross that we discussed already, and this is the monthly one, which is going to happen. I think there is no way Goldman is going to escape it, and we discussed it in previous stocks in motion. So there were only 3 crosses of such magnitude, one in 2021 and another one in 2007. So technically, I would be looking for Goldman correction at this point to be aligned with these two. Maybe it's going to be an average of these two. So that's the perspective from technicals, and the final chart. This is what we shared with our subscribers on March 29th. So far, this chart worked perfectly, and we might need to move this wave just a little bit lower. So this blue one, I think it is invalidated right now. We put it later. So far, this wave upward, either the entire wave B or wave A of a bigger correction. So put a different color here. So this could be either wave B or wave A. Let's see how it works from there. So far the wave has been corrected, and today is April 21st. Well, that's the perspective for Goldman Sachs and for Microsoft. As you can see on the surface and the short term, everything looks bullish. However, once we scratch the surface and we start looking deeper into technicals, especially in MACD and other indicators, the things are not as healthy as they could be. So let me wrap it up here. The S&P is gliding higher, but the engine room shows mixed readings. Volatility may be cooling, but don't mistake it for complacency. The dollar is laying bricks for its next breakout. Bonds and TOT have spoken. Listen closely. Oil continues to confirm the bearish case. Precious metals approach a pivotal moment, and uranium's next play could be bigger than most expect. Microsoft and Goldman Sachs, their candles may have more to say than the headlines. And if you are serious about timing, structure, and statistical edge, this is the place. Master Trader Kyle shares high conviction setups daily in our private Discord. Surgical, disciplined, and fully backed by waves and candles. Like, share, and pass it along to your crew, because the more people we engage now, the more affordable this service becomes in the future. Until next time, stay sharp, stay objective, and remember, at Investing Angles, we chart the turn before the herd even blinks.